Hello, everybody. It's Sunday. Over 3 years in of streaming every single day, but I do appreciate being here, and I thank you all for coming. This video today is an interesting one. Obviously, it's called Pair Trade of the Decade, but things are getting a lot harder now. We've seen this during the summer, things chopping sideways. We can no longer buy stuff at $8 and it goes to $200 and we just sit back and have a good time. No, we've got to get much more aggressive, much more creative. We've got to swing a lot harder. And that's what this video is all about. So big thank you for everybody for coming. We'll talk about why doesn't Saylor buy a miner? We'll talk about what I call the trade of the last part of this decade, Bitcoin versus Tesla swing trade, which is near and dear to my heart. We'll talk about Jupiter, Uniswap, RIOT, CleanSpark, miners, pair trading, ATR, LILO, tops, dynamics, covered calls, a bear called Mac, and so much more. Oh, and DCA as well for tomorrow. So let's go. I hope everybody got that. Not enough coffee, or maybe too much coffee today. All right, let's jump in. And of course, none of this is financial advice. All the questions come from Patreon. Patreon make this happen. And the cool thing about this, by the way, the reason I start work on this on a Friday is I actually learn. Okay, so the questions are so good. They make me think and they give me new ideas. So we all win in this, especially me. I got a new trading idea from this question this week as well, which I'm very excited about to implement. We'll get to that later. So first question is from RST. Why doesn't Michael Saylor just buy a miner? Great question. And it made me think, it's like, yeah, why not? You know, we have things like groups like CoreWeave trying to buy Core Scientific for just their energy, not their Bitcoin mining at all. And we'll talk more about Bitcoin miners and the rankings later as well. But it's pre-HPC. We'll talk about that too. So first of all, let's get back to Michael Saylor, friend of the channel. He's been on here twice and he's a wonderful man. Bitcoin mining is the most lucrative use of energy in the world, says Michael Saylor. He said this on the Pump broadcast last year. If I recall, time goes so fast, it could even be 2 years ago. But that's his view of mining. But let me try, I hope he doesn't mind, put myself in his shoes. Why would I not buy a miner? First of all, you know, it's a great question. Why doesn't he just buy a miner? Well, he probably doesn't want to get his hands dirty and he's making enough money. $6.5 billion just buying and holding. You know, sometimes when you make so much money, you don't have to go to any additional effort. You don't have to take on any additional risk. And that's a big part of my thinking here. So he is a big believer in the long-term value of Bitcoin as a store of wealth. And that's it. Simple, store of wealth. He's not interested in the day-to-day fluctuations of the Bitcoin mining industry, which I've always said is a cutthroat industry. He is playing the long game, and he believes the best way to do that is simply buy and hold Bitcoin itself. He doesn't hedge it, doesn't trade it, etc. And he prefers this rather than investing in the infrastructure that supports it. And let's be honest, his strategy is working very well. And mining is a complex business, cutthroat business, and it is very, very volatile. You also have to think about shareholders as well and employees. And if you think Bitcoin's volatile, try Bitcoin miners. It's next level. So from that perspective, my short and sweet summary, he doesn't need to. And he is making enough doing what he does. So it's that simple. His average cost basis right now for Bitcoin is about $36,000. He's made 6.5 billion in profit just by buying and holding since August 2020. So thank you for the question. Next question is Quant Believer. Assuming there is a perpetual bid on Bitcoin due to the ETFs, does the LILO model adjust the layers to ensure that Bitcoin is not sold too early? Great question. So let's get into the model first and look at a couple of charts and some examples. First of all, my perpetual bid theory is based on the gold ETF. They had a perpetual bid coming in for 8 years, and it went up for 8 years straight, even through a very nasty financial crisis. However, there are some things that are happening right now. I talked the last 10 days about the hedge funds. placing a lid on the price action with the carry trade, which you're all very familiar with now. Also, the miners, speaking of the miners from before, they have been dumping hand over fist like never before. We had a weird situation where we got to an all-time high before the halving, never happened before, and that's forced the hand of many of the miners to keep up with the hash. Because the price has gone up, it's made more miners plug things in, so they need more efficient, more effective rigs, therefore they have to sell more because it's a more competitive space. That is part of the problem, and we're seeing exactly what's happening out of the Bitcoin price, and people are frustrated. In fact, as I talk, let's check out the Bitcoin price. Where are we? Right now, live. Bitcoin is at 64,100. Still hovering right within a couple $100 of that short-term holder realized price cost basis. It's like a magnet. Anytime it dips below, retail investors are coming and buying in. I personally am hoping to see 60,000. I'd like to have one more bite at 60 grand before we go up from there. That would be nice. So fingers crossed we get there, and that'll be a time for us all to grab some. Actually, let me get mine first, and then you can come in after me, okay? I don't want people front running me like always happens. Now let's talk about the LILO design. That's the layer in, layer out model. It can be configured to prioritize the trend, whether it's the longer trend, neutral, or recent trend, first of all. Make sure as well you play with this, get a feel for where you are. Now, if there is that strong and consistent demand for Bitcoin due to these ETFs, the model will adjust. And we will also watch this in conjunction with the top and bottom indicator, the Tabby model too. So I spent all of the bear market whipping myself for missing the top. Because big part of me is never, ever, ever make the same mistake twice. So we've invested a lot of money in tools to make sure we don't miss the top again. And those tools have been very beneficial. But let's look at the LILO, for example. The more stagnant the price action is over a period of time, the lower the targets. Okay, this is how this works. This is on very aggressive mode. It looks at both recent and longer trend. And now the upper bound target is 122,000 based on the data. Back in March, when we spiked very quickly to the all-time high of nearly 74,000, the target went to 150,000. And therein, you see the dynamic nature of the LILO model. Now, we're coming out with a new model around profit taking, which is extremely tricky. It took us a long time to crack. I've been working on it for 6 months straight. We are right there. Final touches are being added as we speak, and it will help us optimize this. But having things like a dynamic model and a static model are very, very important based on your goals. And this also dovetails into another thing we're working on called a rotation model, which means not only do you move to, say, selling an asset, but what do you put it in? And that brings in the pair trade of the century. Let's go. And again, these questions are brilliant because they make me think and make sure I tell you the right way. Now, let's look at this. This is from two people, Zipper Sniper, and Socrates69. Bitcoin Tesla rebalance or not? That is the question. Based on today's value, my Tesla position is approximately 11.4 the size of my Bitcoin position. Just divided my Tesla value by Bitcoin value. I'm struggling with, based on some of your recent modeling, if I should rebalance that aspect of my portfolio. I'm all spot, I don't know options, and I may be wise to reallocate some of my spot Bitcoin to Tesla before it has an NVDA run. Thoughts? Well, this brings me into many things. I'm going to take us on a journey now of how I look at things. I always say, and this goes back to 1990, pair trading. I was exposed to pair trading foreign exchange for quite a time. And then I quickly learned 35 years ago, everything is a pair. Everything is a pair. Whether you're swapping between Bitcoin and dollars or Tesla and NVIDIA or whatever, it's all a pair trade. Euro, dollar, yen, whatever, everything is a pair. So first of all, get accustomed to that. Second of all, let's look at Tesla Bitcoin. This is Tesla divided by Bitcoin over a monthly basis, going back years. So we're really, really zooming out here. We're going back to, what is this? A decade plus. Now, you can see here that when we see blue, that's when Tesla outperforms Bitcoin. When we see orange, that's when Bitcoin outperforms Tesla. Right, so this chart, based on the trend, you can literally just trade the optimized trend is what you're looking at here. 5 big times in the history. 5 big times you can sit and you can play. Sometimes you're holding on to this for a year, year and a half. Sometimes you're holding on to it for 9 months. But that's the duration of these kind of green arrows of when you need to be in Tesla versus Bitcoin. But remember, over the last decade, Bitcoin was the best performing asset in the world, except for, you nailed it, NVDA did better than Bitcoin over the last 10 years. Believe it or believe it not. Pretty crazy to think about. So yes, that's why we play in disruption too. So this is on the monthly chart. Now let's zoom in to this chart, which is the weekly chart. And this just goes back 5 years. And we see 5 big trades over the last 5 years, again, based on optimized trend. You can see here blue when you want to be in Tesla, orange when you want to be in Bitcoin. Pair trade, pair trade, pair trade. And it's like boom, 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 boom. You get in there, you hold for a year, and then you get out. Hold the other asset for a year, you get out. Hold this asset for a year, you get out. Sometimes a year and 18 months. It depends. So for example, 2021, you want to be in Tesla from early 2021 to the middle of 2022, then you get out. You move to Bitcoin. You get back in for a little 9-month sojourn, and then you get out while Bitcoin goes on a run. But it gets even more interesting. And again, the more time you have, the easier it is to play the markets when you have this view. But there's also a lot you can do on the weekly, on the daily, on the 4-hour, and even on the 5-minute. Let's go look at a couple of other things. First of all, this is Tesla just since 1st of June, and it beat Bitcoin by 17.2%. So even on a very short-term time frame, you can swing trade between these assets. And in full disclosure, one of the things that has prevented me from trading a lot was the fact that I don't do retirement accounts, but I found some retirement money. It's now in an account. I'm building up to $1 million, and then I'll be swing trading that in earnest, very aggressively, using these tools. And I'll be sharing a lot of that stuff. It's been a plan for me for a while, but I want to get to the level where I can really make a difference with big volume trades. So that's the monthly. Now, let's look at Bitcoin on the ATR model. And this is a hard question because there's a lot of moving parts. If you look at this model here, we are at level 7, well, 6.5 to be precise, which is nearly at the top of the range. So, which is the faster horse here? Which has more upside? Now, if we go to 120K, which is the new target on the LILO model, all right, that's 84% gainers from this point. 84%. Is that exciting? I don't know. Let's look at Tesla on the ATR model. We are at level 2. Look at the way it bounces off that level 2. Boom, 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 so many times. And it's been stuck in this range because of a lot of macro events, the comp plan, Wall Street not understanding Tesla, Twitter acquisition. All of these things have put a bit of a lid on the price action. But if Tesla gets back to level 6, that's 133% gainer. So it'll go far outperform. And this is where it gets tricky. So we've seen that we can trade this thing on the monthly chart, on the weekly chart, on the 1-hour chart. We can trade it on everything as long as we've got the tools, play the trend. I really like this one on the weekly. It's picture perfect. And you don't have to stress. You can go on a 1-month-long cruise. You don't have to worry about anything. Just sit in the position for a year and then get out. So this is going to be a fun one. This is what we're going to play carefully in the community too. Now, from last week, I did share this. This is because between last week and what we have actually done this week, this is the Retire on Cocktail video from last year. And based on the price projections, the price today, the multiples, if we get to the average of all my different models, it's a 9.34x for Bitcoin and a 27x for Tesla. But it got a little bit different. Let me explain why. If we look at just the excessive models, right, this is for 2032, Bitcoin, many believe, including myself, is very feasible that Bitcoin's going to $986,000. Call it $1 million. That's a 15x from here. That's a bloody nice return. Tesla, however, if it goes to the bull target in 2032, that's $8,188. That's a 46x. So it's more than 3x what Bitcoin could do. So think about it. Both will do well, but one is very oversold based on the ATR model, and another, which is the same one, has a lot more upside. But what got really interesting, and this is why I call this the pair trade of the decade, because if you can crack this, that's a decade. And that's all you have to do, sweat free. You got time on your hands, use the system, relax, play these two assets. You can make a very good living just doing that alone. But then I had Herbert, Cern, and Hans on the channel, and we all modeled out what we believe is going to happen in the future. And this is where things get really, really wild and bonkers. Again, people think we are morons. In fact, somebody called me a moron for modeling this. But I don't care. I've been called a lot worse during the Solana downdraft to $8. But that's okay. I stuck to my guns. That's what I do. Heavy conviction. Get in early. Get in hard. That's the way I roll. But if this and these guys and myself are correct, and this is heavily sandbagged, all right, this means that every bot that they make will only make $90,000. Whereas other people believe it'll make at least $100,000 a year in value. We're calling it 90,000 just over 3 years, and then it's gone, dead. This could take the Tesla price to $5,500 in 2028, and after that, things get really wild because things go really exponential due to AI and robotics, and that's just a fact of life. We don't know which one is going to do better. My gut tells me Tesla will outperform Bitcoin through the year 2032. Unless, this is the caveat here, if everything goes to hell in a handbasket with the Great Reset and fiat currencies keep on expanding to heck, yes, the Bitcoin will go up. But so will Tesla too, because they create real value. So fiat will go down, both of these assets will go up, which will be faster. Think about the monthly trade, that's the weekly trade, and think about the monthly trade too. That's what I'm going to be doing heavily, and we're focusing on that very heavily too. Hope that answers your question. Again, right now, when to do it, I'm not doing it yet. I was hoping I'd get called out of my NVIDIA position and then roll that into Tesla. But if I call the top at $128, I won't get called out. So we'll see. Next question. Crypto Neo. This is an interesting one. And by the way, when I'm asked a question, I promise to always answer it truthfully, what I'm thinking in my head. Some of my answers are some people find offensive, but truth is what you're going to get. Okay, so this is a hard question. We are now living in the year 2030. Name the good, the bad, and the ugly, like Okta, and the answer can be on the macro, personal level, etc. From Crypto Neo. Sounds like Neo, who I think is from the Matrix. Now, I'm always start with the ugly stuff because I don't want to end on an ugly note. So this, seatbelts please, this could be offensive. This is what I see happening. Birth rates will tank. This is the ugly in 2030. Education standards will tank. Despite AI, it's already tanking. Humans have lost the ability, many of them, to think for themselves and think creatively. They rely too much on distractions and other things. Nuclear family breaks down. That's used to be the, if I'm not mistaken, 2 adults, 2 kids, and a dog or a cat or whatever. That's breaking down fast. Also, debt levels of both nations and individuals go through the roof. And this causes terrible debasement, which ravages everybody unless you have hard assets. And this is the piece which I go counter to Elon Musk on this. He believes the world is full of abundance as we go forward. I do not buy this for 1 second. I believe wealth inequality will hit unprecedented levels. Those with AI, those who embrace AI, those that have the bots and robotaxis, etc., will stay ahead. Those without will fall behind. And that leads to the next part. So all of this is interconnected. I had to break it up somehow. So it leads us to the bad news. First of all, AI and automation leads to huge job displacement. No ifs, ands, or buts. Okay, traditional roles will be rendered obsolete. New jobs will emerge, but there'll be fewer of them, and they will require special skills. They will require people who can handle AI and systems. I'll give you an example. I've walked the Cybertruck line at Giga, Texas, twice with a Ford engineer who is part of the community. There is no place for workers. Workers monitor what's happening on the line from upstairs by looking at cameras that look at what the robots are doing. Everything is automated. There are no humans. And this is just the beginning. Just the beginning. If you look at a production line for Ford and GM, you see lots of people walking around carrying doors and drilling things and putting seats in and stuff, putting tires on. It's all automated at Tesla. All. There is no place for a factory worker. There is a place for an engineer that can spot problems from a camera above and intervene when necessary. That's important. So they are kind of the jobs that will require those special skills. Also, related to the ugly, because people, don't have any money, they get angry. So I see violence in inner cities escalating. And I have a whole theory on, it sounds weird, anarchy versus capitalism. And the quick way I think about it is when young people have nothing to live for and they've got no prospects, they've got no money, they get angry and they get frustrated and they start breaking things and robbing things and doing bad things like drugs and stuff. I see this already in cities in America, okay? I see this in New York. I see this in San Francisco. I see this in LA. I see this in Chicago. It's all playing out, but way earlier than expected and at a horrific level, and nobody's stepping in. So this could get a lot worse. Again, more of that. When people have no opportunities, they resort to anarchy. Could be a weird theory, but anyway, I'm sticking to it. Also, the gig economy will lead to global nomads. So that means people will be basically moving around the world working, which means they won't have a castle, they won't have a family, they won't have an established routine or place. They just have a laptop and a backpack and cell phone and just be on planes going from gig to gig all over the world. And that also is, I don't think that's a good way to live. It's fun when you're young, but not long term, and it breaks down society. Also, extreme weather will get worse due to the need for extreme energy to power AI. Okay, not an environmentalist. Don't go mad. But, the amount of, I'm actually working on a video right now on power and how much power is required to handle this new world that's coming as well. Let me see. My trading view just got disconnected. That's always concerning. Anyway, that's the bad news. Let's get to the good news. There is some good news, ladies and gentlemen. And sorry, this is a tough question, required a lot of thought. The good in 2030, applied AI and robotics will become integral to various industries, and they will enhance what I call E squared, which is a lot of effectiveness, a lot of efficiency, a lot of productivity, a lot of good stuff. Maybe some abundance for some people, not everybody. Also, the ACEs will be everywhere. ACEs are autonomous, connected, electric, shared vehicles. And the good news about them is they won't crash and they won't kill people. So a lot of lives will be saved and maybe emissions will be reduced in cities. And quantum computing will solve a lot of hard problems. By the way, one of the hard problems it'll solve may be to crack Bitcoin, which is a concern. My target is for Bitcoin to be quantum hackable by the year 2028. We'll see if that handles it, but the Bitcoin protocol can be quantum proofed. So don't freak out yet. We'll be on top of that. I hope I'm around in 2028. Anyway, around to be with you guys. Healthcare. This is another good one. We'll see remarkable improvements. Hopefully, they'll be able to cure things like diabetes and cancer and all the horrible things that humans have to go through. I do believe there will be massive advancements on the medical side, which would be great, and may even have robots doing what they call it, surgery without opening up the body, but through little veins and stuff. Anyway, that'll be cool. There'll be zero latency connectivity, 6G, Starlink, etc. The whole world will have access to the internet, which is awesome. And then VR, AR is next level, but that too will bring about some problems because people will be more introverted because they have the whole virtual world. They won't need to go outside, which is a double-edged sword. Anyway, that's my forecast for 2030. And by the way, our hard assets will be very, very high. Ta-da! Remember these guys? Yeah. So that's why we get them now. We get them while they're cheap. And then we wait, just like Michael Saylor did too. All right. So hope that helped. Thank you. Next question is from Nacho Libre. ATR backtest looks solid for CleanSpark on the way up and the way down. How do you think through exiting at the top versus swing trading all the way down? Ooh, I like this question. This is the question that it was so good because when I was digging into it, it's like, I never thought about this in that way. I was thinking much more around taking profits at tops and rotating or layering out, rotating into other assets. But let's break it down two ways. One is let's look at CleanSpark. Now, by the way, this is the ATR model, but it's on deviation model, not trend. All right. On deviation, you get a 95% win rate. On trend, you get about an 81% win rate. So deviation is what you want to use for a CleanSpark. And there are certain things that work really well in the deviation model. FX, commodities, Bitcoin miners. Not Bitcoin, Bitcoin miners. Very important. So this is so cool. Again, you'll see green flag is when you buy, red flag is when you sell, and it nailed the top. So it's hard to see. So I'm going to zoom into this chart a little bit here, and you'll see a couple of things pop out. One, it nailed the frickin' top at the end of March. Unbelievable. And then it tells you to buy, but you only buy when the trend turns. And then you sell when the trend turns. So I marked the places where both things happen. Sell, buy, sell, buy, sell, buy. And this is just since April of this year. So yes, and you can do this all day long. Also, I want to point out the way it bounces between not just off of level 4 cleanly every freaking time. By the way, anybody in Patreon knows where I buy CleanSpark at $15. Why? Layer 4. Because of this, not because I'm a genius, but because I use a model. That's why. Also, you'll see the top. It did hit the top layer 6 once, but then it's bouncing at the same thing, level 5. Boom, 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 boom. These levels are there for a reason. So that's the first thing. Yes, you can do this all day long. But let's talk about what you can do on the way down. So this question popped in literally 10, 20 minutes ago, and I blocked out their proper name, took off a term because people will reach out to people in the community that they think they'll listen to me. They'll pretend to be me. I'll never reach out one-on-one. I don't have the time, nor will I ever ask anybody for anything. If anybody does ping you and they pretend to be me, I guarantee you it's not me. Okay, so just don't be tricked. But with a name said, I know, let's forget that. But I wonder if it would be possible to retire on much less by selling option for income. Love to hear your take on it. And the answer is yes. Yes. Covered calls strategy. Very basic. Is what changed my life in the 90s. Super simple. Wait for things to pop. And I didn't have the tools back then I have now. Sell a call. Wait for it to evaporate, lose its value. And then do wash, rinse, repeat every 8, 12 weeks, like clockwork. Here is how you do it with that same chart, which you can do also on the way down. Instead, here you have at the tops, instead of selling, you sell a call. And then you buy it back at the bottom. You sell a call again at the top. You buy it back at the bottom, or you let it expire worthless. Wash, rinse, repeat. And what you can also do, if we get to a real top, you can buy a put. All right? And then sell the put at the bottoms. Buy a put at the top. Sell a put at the bottoms. You can work it all the way down. That's what you can do. And that can be very lucrative. And I'll be doing that myself. And remember, I do want to point out one thing. This is on the daily chart. Deviation model. Think double D. Deviation model on the daily. Okay, so important for CleanSpark. Now, let's get into the next question, which is related. Everybody must be trading miners like crazy. And by the way, trading Bitcoin miners is the funnest thing to do ever. They are massively volatile. They swing like crazy. And they're not correlated to Bitcoin directly. So it's a beautiful opportunity. Next is from K. Carlos. Swapping some CleanSpark for RIOT could be a good idea given the pair RIOT CleanSpark on a weekly long-term horizon. Is RIOT comparatively undervalued to CleanSpark at the moment? NFA. So first of all, let's go back to another thing that I can pull up here. The weekly chart. This is Tesla Bitcoin on the weekly. This covers 6 years. All right. Bull markets and crypto don't last that long. So you cannot use the weekly to trade RIOT CleanSpark. You got to go daily, 12-hour, 4-hour, 1 hour, 15-minute, 5-minute. They are the time frames that are the best to trade on, okay? Where was I? Here we go. I want to bring that back in. Let's look at CleanSpark versus RIOT. CleanSpark has smoked RIOT by 400% over the last 12 months. Okay, far outperformed. Yes, it's been volatile, but look at the blue. The blue trend is up all the way. Has not turned around. So be careful trading these two. Be very, very careful. And now, RIOT does have some advantages, like energy credits, which really pump its earnings, and it does score well in our model. I'm going to pull in the miner model ranking right now as it stands. Remember, this is before I'm working on a HPC modifier. There's about 20 ratios that go into this scoring, but I'm going to add another one, which will have a pretty heavy weighting, maybe 10 or 15% of the overall composite score. And it's going to have to do with HPC, those miners that are pivoting to AI, which I didn't believe in the beginning. But when I saw CoreWeave trying to acquire Core Scientific, that changed my calculus. And remember, I have to say this too, always keep your tap dancing shoes on. Theses change, valuation methods change, right? Like robots changing Tesla valuation like crazy. So here we are. The top ranking is now CleanSpark Hive has jumped into number 2 position, RIOT number 3, Bitfarms number 4, etc. But names like BitDeer and Iris Energy have some very interesting things coming up. And when I crack the new code on this model to take into account things like miners that make their own rigs, things that like miners that are growing hash dramatically in places like Bhutan, and things like miners that have 10% of the business given to HPC, which is AI inference, compute. That's a big space, and that is also going to modify these miners as we go forward. So stay tuned for that. The minority report will come out next week. Next question is from Nick S. Jupiter is proposing a 30% reduction in the total supply of its JUP token. Does this impact your price targets for this bull run? It sure does. Big time. Let's look at some simple things. I'm in the process of updating my price prediction model for Jupiter, and I own Jupiter in full disclosure as well. I got airdropped a lot because I used it very heavily, and I matched that airdrop, and I bought more when it hit about 56 cents a couple of months ago. So that's my position. This is Jupiter with the market cap Uniswap at an all-time high. That means Jupiter could go to $16.69. Let's check out the price right now for Jupiter live, because I think it's about 72 cents, if I'm not mistaken. Jupiter, 74.4 cents. So it's not down to 56, it's not too bad. And Jupiter, going to the market cap of Uniswap now, would be $5.55. So that's a 7x, which isn't bad. But let's look at our crypto compendium model too. Here, I have this thing, I call it percentage of OG, which is how much it would be. How much is it now as a percentage of Uniswap? It's Uniswap versus Jupiter. It's kind of like a mini face-off using crypto compendium scores. And the upside for half is 220%. So yes, I do believe it has a lot of upside. Now, what happens if 30% of the supply is cut, 30% haircut, gives the full upside to match Uniswap, goes up from 435% to 622%. And if we just get to halfway, it goes to 310%. So yes, indeed, it has a huge impact. Now, let's talk about these two. Why do I compare it to Uniswap? Well, Uniswap is the 800-pound gorilla incumbent in the space. And Jupiter has flipped Uniswap DEX on volume. Right, that's part of my whole black hole thesis, which is finding newer technologies that do the same or better with better tokenomics than the incumbents in the space. And therefore, I believe Jupiter is better than Uniswap and undervalued. So yes, that 30% haircut will change things dramatically and for the better. Waiting to get some more Jupiter. Next is from Fall Off. I'm going to drink some tea for a second. So, with the petrodollar era ending, I tend to see an increased volatility on exchange rate between USD and other currencies. Me, a European citizen, owning some American shares, should I be worried that my profit on the USD investments get diminished by exchange rates dropping? Very good question. So, very first job was looking at exchange rates. So, you're asking the right person. First of all, let's look at a couple of things. The new debt creation is staggering for the US dollar. It's toilet paper. It's nearly 35 trillion in debt. They're adding $1 trillion every 100 days. It is horrific. Who would want to own this piece of toilet paper? The answer is nobody watching this channel. Next, ECB money printing. Yes, Europe has curtailed their money printing, particularly the, let me see what is it, M0 supply went down hard, as well as M1. But you notice M2 and M3 have been very stable, especially the M3 money out there in Europe. So they are still printing, and their printing machines are going to go into high gear. Now let's look at a long-term chart. This is euro versus dollar over the last 15 years. Simple little chart. The trend is down nasty. The US, as I say, is a dirty shirt in the laundry. But the euro is a dirtier shirt. And you can see the rate here over the last 15 years went from 1.56 dollars to the euro to 1.06 today, nearly parity. Will it go down more? I'm not sure. But there's a couple of other factors. First of all, ECB have cut rates first, which will weaken the euro versus the dollar because people want more dollars because it pays a little more coupon interest rates. But also this other factor too, the ECB versus US growth rate, the Eurozone, 2024 growth rate 0.4%, US 2.4%, and 2025 forecast 2.1% versus Eurozone 1.5%. So it is estimated the US will grow faster. And if you saw my recent macro video, bad things are happening in places like Germany, which is the powerhouse of the Eurozone. And it's not a perfect situation. US is by far from perfect, but it's not as bad as Europe. So again, I wouldn't worry about that. If you do want to hedge, you can do that. If we see an opportune time, for example, here, based on the chart, if you see a dip of, say, the euro dollar going down to 0.98, 0.99, that's time to definitely manage your risk and get in there. And could we go down there again? Given this trend, yes. But there's a lot of things you can do as well to be creative. But I wouldn't worry holding American shares at all. I'd rather hold dollars than euros if you held a gun to my head. Hope that helps. And no offense to those holding euros out there. Because you're not, because you're holding Bitcoin instead. That's your money market. That's where you put the money. And favorite part of the week, helping animals. Thank you to the team that makes this possible. We donated to Paws to help support the care, food, shelter, medical for the following animal. Mac, who is a black bear. He lost one of his legs, likely due to a trap, but is very friendly and seeks human attention. And so Fish and Wildlife decided he should not be released into the wild, so we're helping take care of him. So thank you all. And tomorrow morning, 7:40 a.m. Pacific, 7:30, 7:40, around there, we'll be on with DCA. Mando is moderating. We're going to be talking about crypto and meme coins and DPIN and Bitcoin and macro and the best stock for the future and so much more. Again, what's very important is to have a round portfolio. You can't be all in on one thing. You need to be somewhat diversified. And that's what we'll be talking about tomorrow as well. So look forward to that. And thank you to the mods in the chat. Don't forget to like if you learned something new today. That's all I ask. Nothing more. Let's do some live questions as well. And thanks again to T&D Tesla and Sean Donnelly and K8 for moderating here. And it's good to see the whole team Super Soul Man as well. You rock. Oh, we have 6,500 people watching. That's crazy for a Sunday. I think last Sunday was a bit quiet because it was a Father's Day or something. I don't know. I was working, so what would I know? Let's see. One Brightum. So much positive news for Sol, but most of the crypto Twitter seems negative on it. Where do you see short-term low on the charts? So one Brightum, I was a buyer at 129 on Friday, and that's typical. So there is a lot of hate. I did a video a while back called The Most Hated Assets, and I'm always in the most hated assets. Things that cause disruption, things that rattle the incumbents, piss people off. So the amount of fury and anger and piss and vinegar on Twitter is out of control. But it's the same thing against Elon Musk and Tesla and Solana and whatever else. It's just, yeah. So be in the most hated assets. They always outperform. And I proved that in the video too. So in terms of where do we see short-term low? I don't know. The more it falls, the more I buy. I still believe there's a lot of upside. The news that came out, and I made a dedicated video on it, is mind-blowing. They were already so far ahead of other chains. And forget what you might hear. Oh, Chain X does more of this because whatever. And oh, decentralization. Do me a favor. Do some research. Where could we go? I don't know. We did hit low 100s. I think fell to 106 a couple months ago. Could that happen again? Possible. We are in the middle of the summer doldrums. Bitcoin is stagnant. Hang in there, but we'll see. We could be chopping sideways for another month or so. And they are the times, it's probably the last chance to stack before we get the big bull run. And then we start layering out. So that's the game plan from here. B-Man, happy Sunday. Mods, and community. Thank you so much, B-Man, for always being here. Appreciate you. Stephen Ron PS4. Capitalist here. Recently got the ATR model on Sol or Bitcoin. Which time frame do you use? Read or execute markets? I'm familiar with the settings, but want your 2 cents. The backtest is golden. The trend is golden. It's designed for daily or 12-hour charts, but you can also use it in 4-hour, 6-hour, 8-hour charts. What you do is you dial in your asset. Don't forget to flip trend to deviation. Don't forget to turn on the noise suppression. Start with no noise suppression, go all the way to high, and then do moderate and low. Watch the back test every time and dial it in. That's why we saw here, for example, on CleanSpark, absolutely golden. But on the deviation model, let me pull it up again in case you forgot it or missed it. This is CleanSpark on the deviation right here. Again, it's on the daily and on the deviation model, and that's golden. And that's all you need. That gives you a solid trade every 3 to 4 weeks that wins 95% of the time. So that's what you do. Also spend time in Discourse. We have a whole support team there, and we have a whole bunch of experts there that will share all their trading ideas. Discourse is the valuable gold as well. Go to the ATR channel in Discourse, and you'll learn a ton. Fubar, thanks all for goodness, and your team provided very. Thank you so much as well. And Hightower, good to see you, buddy, and good chatting with you as well on Discord. Bill S. My good friend told me about this channel. Love it. Could Solana 5 to 10x this bull run? So I did let me see if I can pull it up, because I did that work yesterday. In fact, it was based on Milk Road. They had this chart. Let me show you this chart once again in case you missed it, because this is golden. Hold on. Give me 1 second to pull it up. I've learned how to pull things much better into here. Okay. So this is the price targets. Okay. What you do with this model that I built, you identify the crypto dominance. For example, Sol dominance. We're about 2.7% right now. We were 3.2% a few weeks ago. We're going to 4%. Then you estimate the crypto market cap this bull run. Will it hit 5 trillion? I think absolutely. That means if we hit 4% Sol dominance and we go to a $5 trillion crypto market cap, that's a $468 price target. Now, Milk Road said we'd go to 10 trillion by the end of 2025. If that does happen and we go to 4%, that takes us to $914. So given the current price, that could be 7x from here. No guarantees. 5x, I don't know. Considering we were buying at $8, if it goes to 360, kind of 300, 360, that's kind of like my bear target. That's still very, very good. So hope that helps. But use this chart to help dial in your expectations, and then use the layer model to determine how to take profits and when to rotate to. So hope that helps. Bill S. Max Grease. Do birth rates matter with AI and robotics? Yeah, babies do matter. There's no society if there's no kids. So that's my belief. I know places like Italy and Greece, birth rates are very low. In fact, I remember when I was living in Switzerland, I used to spend a lot of time in Italy, in a place like Milan. Nobody was getting married. Nobody was having kids. And this was the early 90s. Okay, we're talking 91, 92, 93. Nobody was having babies back then. So I wonder what it's like now. It's probably a lot worse. Anyhow, so yeah, I do think, we've got to forecast forward. There is no civilization if there's no birth rates. There's nothing. And we want the right people to have the kids too as well. So you need a mix of people. You can't just have certain people in certain countries having babies and nobody in the Western world having babies. That just doesn't work either. So you see that happening in a place like Japan right now. It's a real crisis. And I heard as well in Hungary, I literally read this in the paper. If you commit to having 4 kids or more, you don't pay taxes the rest of your life. That should give you an idea as to how important kids are. If a government is offering you a tax-free status for the rest of your life if you have 4 kids, I don't know. Let's all go to Hungary and have some babies. How about that? Not baby advice, by the way. Anyway, thank you for your super sticker as well. That was the end of the questions. Oh, Super Soulman asks, are you still excited about NOS? Yes, I am. I'll be talking about NOS and Render and IO tomorrow on DCA. Make sure you tune into that. I'll get the input from Mando and CTO on this too. Render is the biggest. Nosana is doing some very, very interesting things. And it's still a tiny market cap. It's like $200 million market cap. So I like things that are doing interesting things, but very small, which gives them a lot of upside, especially this stage of the market too. But yeah, my commitment on those Soul alts, I would buy them and I'd hold them for a year. And that's what I'm doing. So all the Nosana I've ever bought, I'm still holding. I did offload my PITH because that huge unlock of 146%. That was the only exception. And I published it widely ahead of time that was my plan. So, but I'm still looking to get back into PITH as well when it stabilizes. Now, and then finally, thank you for Super Sticker, Silicon Valley Stoic, Crypto Katana, Forrest M, Brock, BTC Maxi Mike, Signal 103, Ben Hart, Art, Andy, Dogwan, and Bert Frank. And thank you as well to the team behind me, gathering all the questions, making all this possible every single day. Thank you all. Have a great Sunday and get out and enjoy the sun. Bye-bye.